Hello everyone, in this video we'll be discussing the next problem in your IFRS topic, chapter accounting for assets and liabilities. So we stopped with the problem in the previous video in the IFRS topic, so we'll continue with illustration 6. So illustration 6 starts with Indu Limited began construction of a new plant on 1st April 2015 and obtained a special loan of rupees 4 lakh to finance and construction of the plant. The rate of interest on loan was 10% per annum. The expenditure that were made on the project were on 1st April 2015 rupees 5 lakh, on 1st August 2015 rupees 12 lakh, on 1st January 2016 2 lakh. The company's other outstanding non-specific loan was rupees 23 lakh at an interest rate of 12% per annum. The constructions of the plant completed on 31st March 2016, you are required to calculate the amount of interest to be capitalized. So they're given here the loan taken amount and when was it taken and what was the interest. So we need to calculate how much amount to be capitalized or what is the amount of interest to be capitalized. So let us get into the calculation. So the calculation part here states calculation of total interest to be capitalized. So we have the date as date is given in the question. We have date, amount spent, interest amount, borrowing cost. Is this amount spent for the developing a qualifying asset? Just look into the question. Indu Limited began construction of a new plant. Yes, construction of a new plant is nothing but developing a qualifying asset. So in this question we have developing a qualifying asset. So we have date, amount spent, interest and borrowing cost. So the loan what is taken here, the borrowing cost is nothing but the interest which is being paid will be capitalized along with the asset value. So what are the loans taken is, the loans taken here is on 1st April 2015 and obtained a special loan of rupees 4 lakh to finance the construction of the plant. Then the expenditure that were made on the project were 5 lakh, 12 lakh and 2 lakh. And the company's other outstanding non-specific loan was rupees 23 lakh. So the money spent for the development of that asset or to develop that qualifying asset is 5 lakh, 12 lakh and 2 lakh. So initially they took loan of rupees 4 lakh, but this 4 lakh is not sufficient to meet the expenditure which incurred on 1st April 2015, which is 5 lakh, on 1st August 2015 12 lakh and 1st January 2016 2 lakh. So in order to meet the other expenditure, okay, with this 4 lakh you were able to meet a part of the expenditure which was incurred on 1st April 2015, but still there is still 1 lakh which is to be spent, but you have taken a loan of only 4 lakh. But in the question they have stated there is an excess loan which is taken, which is a non-specific loan which was taken for rupees 23 lakh. So a specific loan which is taken for the development of a qualifying asset. A non-specific loan is a general loan which is not taken for developing which is for developing this qualifying asset. It is a general loan, might be for meeting any working capital expenditures in the organization. So this is the expenditure which is incurred for other to meet other expenditure in the organization, but not for the development of the qualifying asset. But it states that according to the points or the rules which states for capitalizing a particular amount, what are the rules stated is a general loan can also, interest on general loan can also be capitalized when the part of the amount is used for the developing of a qualifying asset. Yes, as the expenditure is more than the loan what you have taken, this amount is being utilized to meet the expenditure for developing a qualifying asset. So the loan taken is how much? 23 lakh. Okay, out of this 5 lakh expenditure incurred, the loan taken is 4 lakh which can be paid, and the 1 lakh was taken from a general loan. So we will put into the calculation. So now the calculation is on 1st April amount spent was 5 lakh. So interest amount how are you going to calculate is 4 lakh is the initial loan which is taken. At what rate? As per the question, the rate is at rupees at 10% per annum. So 4 lakh into 10%, which was paid for this expenditure, it's 10% of it will give you 40,000 as the interest what you're paying. But on the same day, you met only 4 lakh from the special loan. The other amount, the leftover amount, that is 1 lakh, 5 lakh minus 4 lakh, which will give you 1 lakh, is being taken from the non-specific loan of 23 lakh. So 1 lakh out of 23 lakh is taken to meet this expenditure which is incurred on 1st April 2015. So for this loan, what is the interest? 23 lakh. Non-specific loan was 23 lakh at an interest of 12% per annum. So 1 lakh is taken out of 23 lakh at the rate is 12% per annum. So 1 lakh into 12% is 12,000. Next, in the question, on 1st August 2015, 12 lakh was spent. So now on 1st August 12 lakh was spent. So what is the interest? 12% from the non-specific loan. So now the amount which is spent for this development of a qualifying asset is taken from the non-specific loan of 23 lakh. So now the calculation 12 lakh into 12% into 8 by 12. So you all can ask me, it is only 12% is the interest. Then why did you calculate the period? Yes, if you look into the points what we have gone through the other videos of the theory topics of borrowing costs, which states borrowing cost eligible for capitalization, explains you how general and special loan, that is special and non-specific loan, is treated. Then comes your commencement of capitalization. Under this commencement of capitalization, what it states is an entity shall begin capitalizing borrowing cost as part of the cost of a qualifying asset on the commencement date. The commencement date for capitalizing is the date when the entity first meets all the following conditions. So what are the conditions is it incurs expenditure for the asset. So when the expenditure for the asset is incurred, only then the amount what you spend on it or the interest what you pay for the borrowing what you have made will be accounted, will be treated from the date which the expenditure has been formed. Next, it states it incurs borrowing costs and it undertakes activities and that are necessary to prepare the asset for its intended use or sale. So it clearly states an entity will make the amount capitalized, will make the borrowing cost, that is nothing but the interest, to be capitalized for spending on the qualifying asset from the date of commencement or from the date when the expenditure is actually incurred. So that is why here in this calculation what is shown here, we take in the problem what is shown here, we take 12 lakh into 12%. So when was the expenditure actually incurred? On 1st August 2015. So when is the financial year starting? On 1st April 2015 to 31st March 2016. So in this financial year, the expenditure incurred in between, that is on August. So we will take only that period interest to be capitalized. So 12 lakh into 12% will give you for a year interest. But we need to consider from when the expenditure is incurred and from when that amount is used into for developing that asset. So 12 lakh into 12% into 8 by 12 will give you 96,000. So 96,000 is interest which is to be capitalized. Next, on 1st January 2016, 2 lakh is the interest. On 1st January 2016, in the question it states 2 lakh as the interest. So to meet this 2 lakh, you need to take it from the non-specific loan 23 lakh. So you will take 2 lakh into 12% as the expenditure incurred for this date is on 1st January 2016. So which is for 3 months, that is Jan, Feb and March. So 2 lakh into 12%, which will give you annual interest. So 12% on that you will charge only for 3 months. Into 3 divided by 12 will give you 6,000. So this is the interest which is to be capitalized. So the total interest interest is 40,000 plus 12,000 plus 96,000 plus 6,000 will give you 1,54,000. So this is the interest which are you supposed to be capitalized from the expenses what you have made, or from the loan for the special loan as well as for the non-specific loan what you have taken. So out of the 23 lakhs loan taken, 19 lakh is the exact amount what you have utilized. Out of this 19 lakh, the specific loan is only 4 lakh. So the remaining 15 lakh is from your non-specific loan. So out of this 15 lakh non-specific loan and 4 lakh specific loan, the interest what you're capitalizing for developing that asset is only 1,54,000. So let us get into the next problem, which is your seventh illustration. So under this illustration, Suresh Limited began construction of a new building on 1st April 2015. He obtained rupees 1 lakh special loan to finance the construction of a building on 1st January at an interest rate of 10% per annum. The company's other two outstanding non-specific loans were rupees first point were rupees 5 lakh loan at 11% interest and rupees 9 lakh loan at 13% interest. The expenditure that were made on the buildings project were as follows. 1st April it is 2 lakh, 1st July 2 lakh 50,000, 1st October 4 lakh 50,000 and 1st March 1 lakh 20,000. Building were completed by 31st March 2016. Calculate the amount of interest to be capitalized. So it is a similar kind of problem of your illustration 6. So here they have asked us to find what is the amount to be capitalized. So computation of average accumulated expenses. So first we need to calculate what is your average accumulated expenses. Here Suresh Limited began construction of a new building on 1st April 2015. Then on 1st January, for how much? He obtained a special loan of 1 lakh. Okay, to finance the construction of the building on 1st January at an interest rate of 10% per annum. So he took this loan on 1st January 2015, which is before the financial year. So financial year starts from 1st April, but this was taken on 1st January 2015. So we will not consider this loan amount into capitalizing the qualifying asset because it is not within the financial period. So next is the company's other two outstanding non-specific loans were 5 lakh at 11% interest and 9 lakh loan at 13% interest. So this loan was taken which were outstanding and was taken on 1st April 2015. As the date is not given here and the sentence is after the special loan which is taken, so we will consider this loan to be taken after 1st April 2015. So out of this non-specific loan, 5 lakh and 9 lakh will be used to meet the expenditure which was incurred. So this loan was taken from of rupees 5 lakh and rupees 9 lakh. So let us look into the expenditure. On 1st April, rupees 2 lakh was spent. On 1st July, 2 lakh 50 was spent. And for 1st October, 4 lakh 50 was spent. And 1st March, 1 lakh 20 was spent. So out of the money what we have, we will look into what is the exact loan amount and interest we are going to consider and we are not going to consider. So now they have clearly stated building was completed by 31st March 2016. Okay, computation of average accumulated expenses. So on 1st April 2015, 2 lakh is the loan amount, and first we will calculate the expenses which will be met in that particular period, and then we will charge interest on it, or you can also charge interest directly. Either way you can do it. So in this problem they have charged interest separately. So on 1st April 2015, loan amount is 2 lakh into 12 into two, it is used for the full period, that is from 1st April itself. So 12 divided by 12, which is 2 lakh. Next on 1st July, 2 lakh 50,000. So this amount was was on the month of July. So July, August, September, October, November, December, January, February and March, which has been utilized only for 9 months, into 9 divided by 12, which will give you 1,87,500. Then other expenses for on 1st October 2015, which is 4,50,000. So as it is on October, November, December, January, February, March, so which is for 6 months, so 6 divided by 12, so the expenses is 2,25,000. So 1st March 2016, which is 1,20,000 into 1 divided by 12, as it has been used only for 1 month, so the amount is 10,000. So the total of it is 6,22,500. So now we will charge. This is the average accumulated expenses which is incurred, taking into the commencement of the exact expenditure incurred for developing a qualifying asset. So now we will calculate the average interest rate. So to calculate the average interest rate, total interest expenses first. To calculate average interest rate, we need to know what is your total interest expenses. So to know what is the total interest expenses, so I have named here point according to point wise. So this will be the first step, second step, and that will be the third step and the fourth step. So now I will show the calculation what I have done here. So problem illustration 7, step 1, calculation of average interest rate. So as we have calculated what is the expenses, that is 6,22,500. Now we will calculate the average interest rate. So to calculate the average interest rate, interest expenses, this is used to find out the average interest rate. So what is the average interest rate formula is total interest expenses divided by total loan amount into 100. So here total interest expenses is interest expenses we need to calculate. As we calculated only the interest amount, the total expenses amount. So now we will calculate what is the total interest expenses incurred. So now total interest expenses is 5 lakh into 11% plus 9 lakh into 13%, which will give you 55,000 plus 1 lakh 17,000. So this is the total interest expenses what you are meeting for the loan what you have taken of 5 lakh and 9 lakh, which is 1,72,000. So what is the total loan amount is 14 lakh. So here if you calculate 5 lakh plus 9 lakh will give you 14 lakh. So on this 14 lakh, as the interests are different, we have got 55,000 and 1,17,000. So the total is 1,72,000 is your total interest expenses. So what is the total loan amount? 14 lakh. So the average interest rate is total interest expenses divided by total loan amount. So now total loan amounts. So total interest expenses is, as you have calculated, which is 1,72,000 divided by total loan amount, which is 14 lakh into 100 will give you 12.29%. So as this amount is which is a non-specific loan, we need to know what is the interest, and out of that interest we will be finding out the average interest rate to find out how much can be capitalized from this borrowings which is non-specific. So it is average interest rate for the non-specific borrowing is 12.29. So now we will get into the computation of amount to be capitalized. So cost of building is the expense which is spent on it. So as per the question, the expense which is spent is 2 lakh, 2 lakh 50, 4 lakh 50 and 1 lakh 20. So 2 lakh plus 2 lakh 50 plus 4 lakh 50 plus 1 lakh 20. So the total expenses what is spent is 10 lakh 20,000. Add interest cost to be capitalized. For specific loan, what you are used for this developing this asset is 1 lakh into 10%, which will give you 10,000. So how did you get this 1 lakh? Initially you use this amount for developing the qualifying asset. Might be the period is over, but you're just showing how much is the amount you're adding on to the asset as a how much interest you are capitalizing along with the interest. So the cost of the asset is so much, and the interest what you're adding is, which was before the financial year, is specific borrowing is 1 lakh into 10%, so which will give you 10,000. So non-specific borrowing is 5,22,500. So how did you get 5,22,500 is from 6,22,500 minus 1 lakh. So from where did you get 6,22,500? The total average accumulated expenses which is calculated here is 6,22,500. So in this 6,22,500, you are minusing 1 lakh. You are minusing 1 lakh. That is because this 6,22,500 includes this 1 lakh. So how is that is? So the total expenditure which was incurred on for 2 lakh is which was incurred for 2 lakh is, out of this for this 2 lakh from special loan 1 lakh will be utilized. It is not the problem when the loan has been taken, it is the when the expenditure has exactly incurred. So as the loan might be taken the financial year, but according to the commencement rule, as the loan can be repaid whenever the real owner can repay it back. But for calculating the interest on capitalization will be done from when the expenditure for that asset to be qualified is exactly incurred. This loan is taken previous year, that is before the financial year. So we will not be taken we will not be considering it in the financial statement, but this will be used for calculating the interest which is to be capitalized, because the asset value keeps on accumulating and it will be shown in the financial statement. So out of this, the loan which is taken for developing of this new building 1 lakh is utilized for meeting this expenditure of 2 lakh, because it is a special loan which is specially taken for meeting the expenditure of building project. So this 2 lakh expenditure which is paid, it will includes this 1 lakh. We are charging from 12 to 12, that is full year, because as per the commencement of capitalization rule states that the commencement of capitalization starts when the actual expenditures incurred. So in short, what it states is this 2 lakh expenditure includes 1 lakh from the special loan which is already met. That is why we are calculating here separately the interest for 1 lakh, and from this total of 6,22,000 which is there in this calculation is being deducted here, because the interest for it is already charged here. So we are charging here only for non-specific borrowings. So out of 6,22,500 which we have calculated, we will minus 1 lakh, which where we'll get 5,22,500 into 12.29. So here we have calculated for that specific general loan what will be the what will be the average interest rate. So the average interest rate what we have got is 12.29 percentage. So 5,22,500 into 12.29 percentage will give you 64,215. So the cost of building is 10,22,000. The specific loan which you have taken before the financial year which you have kept for the development of this particular asset, but it is not being used till now until and unless the expenditure is incurred. This loan was taken in the previous year, but the expenditure incurred for it is for this financial year, that is on 1st April 2015. That is on 1st April 2015, which is 2 lakhs. So you're using the 1 lakh to set off the 2 lakh expenditure. So that special borrowing interest also will be capitalized along with this loan amount. So out of the 6,22,000, we are minusing the 1 lakh loan which was taken in order to show what is your specific and non-specific loan. and the calculation is here. Along with the cost of building, we will add your specific loan with the other interest, the interest which is charged for it. And for this non-specific loan, we have calculated the average interest rate because there are two loans which is taken, and the percentage for the and the interest rate for it is different. So you can ask me the question, why can't we do the problem similar to illustration 6? You can do it, but the interest rate for it was 1 and the amount was taken from as a whole, which was in the previous problem the loan was 23 lakh. For it, interest rate was 1 interest rate. So it is easy to calculate in this in that table itself. Along with the interest amount, it is easy to calculate. But here the interest rate is for two different loans. As it is for two different loans, it is better to find the average. So to find the average, the formula is total interest expenses divided by total loan amount. So your total interest expenses is the interest what you pay for that loan what you have taken. So that is what you have written here, 5 lakh into 11% and 9 lakh into 13%. So interest what you get is 1,72,000 divided by the total loan what you have taken. So what is the total loan? 5 lakh plus 9 lakh, which will give you 14 lakh. So you get 12.29. So as the average interest rate is 12.29, you can directly charge for the expenses what you have calculated here, 6,22,500 into 12.29 percentage. You can also do it as you have done in the illustration 6, but it will be little complicated because there are two different loans. You need to be careful to set up each expenditure to that particular loan. There will be partitions and confusion, so it is better to take average interest rate when there are two or more different loans taken with different interest rates. So thank you everyone. Thank you everyone. We'll look into the next video with the next topics.